Welcome to day one of our day five little mini series here, started by that chart that you saw up, the amount of credit card debt in the US, right? And that all started by me leaving the house, which is technically why I shouldn't leave the house at all, because all these ideas start flooding in. But anytime I'm surrounded with general public and what's going on, it kind of opens up my eyes to some things. So it's going to be 5 days. It's going to start the first two are going to be the worst, and then it'll get better as we go. We're going to talk about some things you can do to kind of keep an eye on it. But basically, this all stems back to me looking at 2007, 2008. I was just on as a cop. The economy was falling apart. I was happy to have that job. But after it happened, you could always go back and look at the data. When I looked at those charts and all the economic stuff, I realized how much was actually visible before it all fell apart, right? I know as the movies came out subsequently. So that's what I wanted to keep that focus on now when I'm out in public and I'm like, this just doesn't make sense. Everyone knows, like, it doesn't feel comfortable right now. So what's going on? And that's where I stepped in to say, all right, well, this is something I want to dive into a little bit more. And you don't have to be an expert. You just have to look at your surroundings and just pay attention to what's going on, because we all feel it, right? So, we all feel like we're uncomfortable. We're making more, but we're not. And we know it's inflation related and we know it's fees related, which I'll get into, but it's overview of what I'm seeing in a personal financial and, from mortgage standpoint and from like stocks and bonds and just kind of in the business world, right? So went to the mall, that was American Dream, I'll call it Great American Dream, but the American Dream Mall in New Jersey the other day. And kids, they have like indoor snow tubing. It's a cool experience mall. That's what they're doing now, which I love. We don't need things, we need more experiences. But as we sat there, we did the snowboarding, and then we went to lunch, and then we got ice cream. And ice cream is where it finally kicked in. $12 for an ice cream, right? $12 for a little cup of ice cream. And I'm like, well, what did it really cost me? A half a day with my family, half a day, 4 to 5 hours, including travel time in the Bell Parkway. Between $500 and $700 for a half a day. That is not sustainable, right? I mean, that's how many times you could do that 4 times a month, and that's only killed a half a day. That's not even like a lot. So then I started thinking, well, how is everyone affording this? Because not for nothing, like, we're not super well off, but we pay attention to where we're spending. I'm like, you did this a couple times a month. You're spending thousands of dollars a month just to get out of the house for this little bit of time. And then I'm like, the place was packed. I mean, mall was packed when we got there. Mall's packed when we're leaving. We're paying for parking. We're paying for, again, that's tomorrow. Over fees is going to be a different Anthony. But you see all the stuff we're paying for. It just doesn't make sense. So I'm like, how does this all pan into like what's going on right now? And then you just look at that credit card debt. We're in the trillions of credit card debt. And that's what started me to look at what was our credit card debt in 07, 08. And you see the peak, and you see it in the earlier years too, back in like the 99, 2001 tech stuff. But 07, 08, credit card debt was high. And then, we happened after that. So that's one of the things I was looking at. Well, how is this sustainable pace? I mean, yes, they're saying the economy is good. How is the economy good? We're all on credit cards. I mean, and I say we all, there's some people who were less affected than others, but just as a starting point, how is this good? We're all on borrowed money paying for the extra fees and markups that we have now. It doesn't make any sense. The economy's not great. So that's when I started looking into all the other charts. But you start with that one right there. We are, if I had to say, like a bubble. But we talk about stock market bubbles. We talk about real estate bubbles. We never talk about personal financial bubbles. And that's what I think is going on right now. Because that thing of ice cream, $12 for a cup, right? I can get a whole tub for, I forgot what it was, like $144. It basically worked out to that I'm paying a 800% markup for that one cup. Times that by 5, and I'm paying $50 or $60 for what I can get in a tub of ice cream. I can get 3 tubs of ice cream, right? So then you say, well, this has always been the case, right? It's not the first time you get charged more when you go places. But now you're getting charged like a ridiculous amount over, right? Like when our parents went to the movies and things back then, shit cost a nickel. When they went out, maybe it was 7 cents, 9 cents, 10 cents, right? Like there was some reason between the two. Now we've just accepted paying 800% more than something it is just because we got it out. We're paying for your rent, your office, your markup, all that stuff. It doesn't make any sense. And that's why it's not sustainable. And that's why people feel this pressure, because you might be making more money, you might be making the same, but you might be making more money, but you're not going to feel it because everything else has gone up percentage fold, right? Now, and I get some groceries and things like that. We have to have there's some level of spending that we have to do. Now, you can't say no to eggs. I mean, we can cut back on certain things, but there's certain things, whether it's electric, gas, we'll talk about that tomorrow, or until tomorrow, have all gone up in percentage wise, but we can't do so much about those things. Insurance, another one. But there's a level of spending that we feel like we've been working. We're doing what we used to do. We're working harder, yet we can't get ahead, and we feel more and more behind. And that's where the credit card comes in. Everybody wants to feel the same life they had, but to do it, you now need credit card, because you're not going to keep up with all these increases. Besides inflation, besides everybody raising all their stuff up 50%, 100%, 800% markups, there's no way for you to physically make enough in your job, and your job cannot pay you to match that, because as soon as they do, we're going to have inflation all over again. So, and one of the things that annoys me the most is when they say, oh, well, people still spending that COVID money. You gave us like $3,000 5 years ago. Who the hell do you think still has that money? It doesn't make any sense. There's no COVID money left. That money's been long gone. And our savings were at an all-time high back then. And now we have zero savings and $1.12 trillion in credit card debt. So that's the bubble we're living on. We're in this personal financial bubble. And if you own real estate, you're shielded from it a little bit if you bought within the last 5 years or so, because of the market run up and everything like that. So you have equity, but your equity is trapped. It's either in your house, it's either in your 401k, Bitcoin, wherever it is. So now you have a cash flow crunch, right? And all it takes is one little financial thing to knock you off. And that's how I think this next recession will come. It's not going to be real estate. It's not going to be stock. It may be stock triggering into people now wanting to pull their money out because they need it for cash flow, but not going to be a real estate crash. Like, hey, lending is good. Lending has still been strong. They're still tough on things. There's a couple of newer programs out there, but for the most part, it's still pretty solid. So, but this is just the recipe for a disaster and fire sales, because if you need to sell something to get your money or do a refinance to pull your money out, that's when it creates that panic, right? And the other part of it is, well, where is it going to come from, right? Oh, the jobs are great. Everything's good. Okay. But everyone knows that you're doing your job 90% through ChatGPT. And your boss knows, and the company knows. And at some point, it's not going to make sense. They'll realize they could replace what you do with that same technology you're using to do your job now. So as much as it's easy right now, you chance the fact of, like, if you can't find a way to create value in what you're doing, then you're at some point could be subject to that cutback, right? You go to McDonald's now and they have all the kiosks. There used to be lines and like no way they ever get rid of it. Now I prefer the kiosk over the person, because the kiosk doesn't make a mistake. And that's what will eventually happen. It may be a cut here, a cut there, but those cuts, any sort of cut, when we're living so stretched to the max, is going to be the trigger for everything else, right? So you look at your gas bill, you look at your electric bill, even if you've cut or saved or stay where you were 2 years ago, your bill is so much higher. I get it a lot with the tenants. They'll call and say, hey, can you just have someone check the electricity? My bill is $100 more than it was, a few months ago, and we're using it the same amount. And I usually say, send me a statement from last year and this year. And it's the delivery fees, it's whatever nonsense they threw in there. But that's why the cost went up. It's not because they're using it more. So you can't, you start looking at this and be like, all right, you have two options. You look around and accept right now that something's not right, right? Now, this is your chance to look and say, you know what, I am spending the same way I used to, and it's not my fault because I deserve to be spending and enjoying, but the cost of everything has gone through the roof. When do we say no? When do we stop? And that's what you have to focus on. And that's what this whole kind of series is about, saying no and taking our power back. Because when you don't, this is going to hit you one way or another, whether you realize it now through this like kind of little chats, or you find out later when you can't pay that bill, or when there's no more money left, or that little thing happens, your car breaks down, things like that. That's where you're going to start to notice the problems. And you rather fix them while you have some time now to do some cutting, some saving, some real hard look at your budget. And it's not just about like, hey, we'll cut back and save. Because if we don't do something, we will lose this battle. You have to get ahead, right? And getting ahead means fighting back. But how can you fight back? You're stuck with your job. You're stuck. You have to pay gas. You have to pay rent. You have to pay electric. But there's ways for cutting back. And I want to say the first tip of this one is find a way to shave off 5% of your personal spending, right? That's it. Because when the tide goes out, that's when you realize when everyone's doing well, you don't see the mistakes. But when that money starts to pull back from different places, that's when you're going to find all the places you've been spending on, the mistakes you make. So look at it now and take a hard look at what you're spending on now. What really make a worst case budget is always what I like to do. Say, dude, I lost my job. Or as I like to say, I used it the other day. It's very aggressive, but it kind of sends it home. It's like, you got 2 broken legs. You can't leave your house. You can't physically get to work to do anything. If you make a job doing that, what are you going to do? Your income is just done. Your regular W-2 or your self-employment, you have no money. What are you going to do? Okay, where's the money coming in from? And then make that extreme cutting budget, right? Hey, I want to keep my house. I can get rid of one car. I can get rid of both cars. I can do this. Make that extreme budget, because once you realize, like, all right, this is my core. I can do it here. It makes it easier to step up. But take an action now, even though something doesn't feel right. Look into it, right? Don't just let the bills sit there and pile up. Because like, there'll be overtime. There'll be some. At one point, there might not be, right? And that's what you have to start making a plan while the time is good. So we've been taking it on the chin for years now. We just let them do whatever they want. And we just accept the increases. And when they take their credit card processing fee and charge it back to us, we just accept it. And that's all got to stop. And we have to stop collectively. So make it a goal to cut your personal spending 5%, right? Whatever it may be. Look at you, say, okay, I spend $100,000 a year in expenses. All right, let's cut 5. Cut 5 out of there. You will find it. It's always there. 5%. I'd love 10, but 5% is huge. Because if everybody starts doing 5%, now they're going to feel it, right? And we'll dive more. Tomorrow will be more in depth about why they'll feel it, and the businesses will feel it, and everyone will start to get the message, because it does work when we collectively do things. Look at, like it or not, the Bud Light boycott, right? Look how much they crumpled that because of they sticking together. So this is what we have to do. We have to start saying enough, right? Stop giving them $12 for an ice cream. Don't say, oh, I deserve it. Yeah, okay, you deserve it, but think about what you're spending. Think about you're spending on a credit card, right? And then paying the credit card companies that make 50% profit margins. I mean, would you love to have a business that had 50% profit margins? So they're 50% profit margins on your $1.1 trillion. And that's all them making it on you. So number one is figure out a way to cut 5% out of your personal expenses. That's it. Just 5%. Look at your spending. Take everything you pay for the year, everything, total, everything you pay, whether it's food, cars, insurance, find 5%. I know you can do it. When you start doing that and then take that approach of, well, I'm not adding anything either. That's the thing. Cut your 5% and don't add anything. That little step times how many thousands and millions of people will have an impact. Imagine everybody just didn't shop for one day, for 1 week. What would that do? That puts the power back to us, because without us having the power, we just keep getting steamrolled, and you're not going to get ahead. I'm sorry. And I had this talk with Janet, and she wasn't happy to have this talk, but you're going to get steamrolled, because no matter what you do and how much you make, they're coming right up. And every time they come up, they swallow a whole class of people that will never see that light of day. There is a group of people that will never be homeowners now because of the prices, because of the financing. They're going to have no chance. So how you can't just run, right? You run at some point, they will catch everybody, because you might be saying, hey, this doesn't affect me. I'm still doing great. I still have this. I still have that. At one point, when they finish here, they're coming up here. Look at your congestion pricing. Look at your credit card processing fees. Look at all of these things. This is just the beginning. They will keep coming because they are broke. The government mismanages and misspends. So make this your kind of wake up call. And please, this is day one of it. We have more coming, but 5% of your personal expenses. Doing this actually on YouTube. So please like, subscribe, share it. This is the way we're going to get the message out. And the more people we get this to, the more of a chance we have. So see you tomorrow. We're going to be talking about overtaxing, over fees, over insured. Oh man, I'm going to have a field day with these guys. All right. See you then.